Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Tuesday the 9th of May 2017, and the trade we're going to look at today is quite a complex version of a trap, so I hope you find this interesting. You've got a market that makes a new high and it pulls back into what would have been this minor level of support in here. So you see that non-selling candle, right? That's spinning top, and then you get that strong move. So that's acted as support. Price breaks to a new high and it pulls back, and what will happen is at the hard rate edge, retracement traders in particular will look at that and be pretty interested in taking a trade. Now just imagine, let's go 2 or 3 candles in. Imagine this is all they knew, right? And price comes into that prior level where it bounced off before. They'll be very eager to take a long in there. So what they do is they then focus on that price action in the here and now, and it makes them come in off the sidelines and essentially take some risk. Now what they'll do from there as well is they'll likely place the stop losses below these swing structures, right, to try and protect themselves from loss. Now no sooner did they go in, price did follow through momentarily, and then it essentially failed, came back to the level, and a weird gap, but ultimately this drop stopped them out. Now just think about what that triggered as a result of that breaking down through that level. So you can have traders who went long in here, and they will place their stop losses most likely below this level in here. Now as price drops down through the level, that triggers those stops. Okay, for those people who place them there, they get stopped out. Okay, now then, if you're a buyer believing that's going to follow through, if you bought in here, right, buy, go long, your stops are sell orders. Right, it's always the opposite transaction to what you take originally, to be stopped out or take profit, etc. So sell orders. Now then, if you're a big institution and you wanted to get long this market just like everybody else, but you can't do buying where everyone else is doing buying, because you can affect the market, you'll push the market up and it'll become too expensive, you can't do business. So what you need is you need to seduce in some, in this case selling, and in the way of stops it's actually forced selling. Okay, now, hardly anybody describes anything in the market as forced buying or selling, but that's exactly what that is, because obviously if you put yourself in the shoes of those people who went long in here, right, and who bought in there, they don't want to be stopped out. That's not something they wanted to happen, and that's forced selling. Now if you're a big institution and you were wanting to do some buying, it's great that you've just been able to seduce in some selling, because in the face of that selling you can do some buying, right, without necessarily moving the market too much, and it pops the market up, right. Now let me just clear this up a little bit so you can walk through the logic with me. So it's potentially semi-unlikely loads of people went long there, other than possibly the institution that we're talking about. Maybe somebody saw that as a demand level, but anyway, nonetheless, not too many people would have gone long there. It pulls back. Now this is where people would be interested. Now what this does is this, if you think about going back to that prior example in here, right, the hard right edge, what's this? It's exactly the same, excuse my drawing, it's exactly the same. It's presenting a pullback into the hard right edge, that so people don't know what's coming, right? And this is all very possible in real time. Apologies, got rid of that, let's put that back in. So they don't know what's coming, and they're not paying attention to the fact that this area, this void that we all have to the right of our charts, right in here, the hard right edge, it's going to fill. It just needs some time, right? It just needs some time to elapse. That's going to fill with price. But people don't sort of think too far ahead. What happens is people get really super focused in the here and now. That's what I refer to as entry cheese. right? Like the cheese, the tempts in the mouse. That confirming price action at the hard right edge tempts in the traders and gets them to commit capital, gets them to take some risk. Because if you think about it, how do you go about taking a trade, right? Big old question mark. What's the process? Well, I would make the assertion that there's not too many major core disciplines. That's the first thing. So we can understand who's taking trades and where. It's not that difficult. Once we figure out what type of trader's taking a trade, so in this case it's a retracement trader, then what is it that makes you take the trade? Just think of your own experience of taking retracements historically. Well, usually it's some type of historical analysis, right, into a prior level, and then once you've done your analysis, it's really then about, is the market reacting in the way that you believed it was at the hard right edge, the entry cheese, is it presenting itself? And that's what's going to make you come in and take some risk, because you believe it's going to follow through. And then where you place your stop losses, etc., all becomes very obvious at that point. So traders go in, obviously not realizing what's about to happen. And where do they place the stops? Again, interestingly, right, below that structure or below that structure. By the way, if the institution's done that purchasing in the face of that selling, are they going to have their stops there? No, of course not, right? So but retail traders and people who don't understand the process will place their stops there or below that structure, which would be tagged by that drop, right? Now then, if you're that, I'll just call it a bank just for the sake of it, if you're that institution, right, that was doing the buying in here, right, in the face of that selling, that's what they'll do. So they'll buy in the face of selling. As this drops to that level, what's that allowing the bank to do? It's allowing the bank to buy more XYZ in the face of more selling, right, at a better price as well, by the way. So it's cheaper for them to do business in there. Now, unfortunately for the retail trader or the trader who's not aware of that process, they get stopped out. Right, so they're very sad about it, and then obviously, you know, as it develops, we're not there yet. But you know, imagine their mindset when price is over here. They're not very, you know, we can add a tear to that image. They're crying because they did buy, hoping they would follow through. They weren't wrong, but unfortunately for them, their moves were obvious, and it allowed, if indeed a trend is continuing and an institution's going to do some buying, you know, midway through that trend or whatever, this is how they'll do it. So let me just clear this up again. So again, forced selling, right? These people who place stops believing that's going to follow through, or placed it below there believing, you know, that move's going to follow through, they get stopped out. And again though, what type of selling is that? Forced. So again, two lots of forced selling. Okay, interesting. Now then, it pulls back into that level, and guess what happens in here? Right, more selling, because who's going to take these trades? Right, it's the retracement trader who took it in here, believing that that level's now gone, and this is now a break pullback, right? Break pullback, very common trading setup. And lo and behold, the level obviously presents itself as if it's going to work. So again, going back to the hard right edge, you know, pick a spot. You know, it develops on, but let's just say, you know, you were thinking, dang, mate, that was my trade entry. It's obviously not working, so I'll trade the underside of that level. The retracement trader looks at that break pullback in here and sees the entry cheese. So they go short. Where do they place the stops? Above that level. If you go short in there and that goes up to that level, that's going to trigger off some buying demand as it goes up through the level. So that's going to help push the move up. But also, as this comes down, guess who can do more buying? In the face of more selling, our friend, the bank. It's a very dodgy drawing of a bank. Right? And just look at the average price of all of that process as well. Right? So The bank potentially did some buying there, There's no reason why they didn't do some buying there, but they couldn't get all the business done. So think of it this way. Think that the bank has to do 50 billion, right? Whatever, it doesn't matter. 50 billion. That first move, maybe they can do, say 5 billion. So say 5B, right? 5 billion. But that leaves them with 45 to still do. They've got to do these transactions. They've got to buy 50 billion sterling, because I know it's a different pair, don't worry about that. I'm just using it as an example. They've got to buy 50 billion XYZ currency. They can't get it all done in one place, so they managed to get 5 billion off. They've got 45 to do. Now there's an average, there's the first buy-in, so there's the average price at that, say price 100. Maybe they get a bit done in there, right? Maybe they get another 5 done. So now we do another 5 billion, and now they've got 40 to get done. Yeah. So we've got 40 left. So price comes down through this level. Lo and behold, they get even more done in the face of that selling. Because it's just such a strong move, and because it's triggering those stops, there's lots of liquidity in here. So there's lots of selling. So that allows for lots of buying. So let's say they managed to get, say 20 billion of that remaining 40 done. So now they've got 20 to do. Right, you understand the process, and on it goes until all that business is done, and then we're off to the races. So if this pulls back, this looks like a pretty good place to get long, and you can be fairly happy and confident in taking the trade, all things being equal, because something rather large, in our example, it's obviously ridiculous to call it a singular entity, but in this example something large, as in the case of a bank, just did some buying of the said currency. So if you'd like to come and join me in my brand new inner circle to understand how to trade the financial markets in this way, and completely go against the conventional wisdom that's out there, come and join us in this exclusive group, and I'll see you on the inside.